So right now, what we're seeing is a flight to quality. And the big problem here is two things. Number one, crypto's always been more volatile than the rest of the whole ecosystem. So if stocks are going down a bit, crypto's going down a lot. If stocks are going up a bit, crypto's going up a lot. But the second problem, the really big problem, is that we want to have a flight to quality, but nobody knows what quality is. And one of the reasons that people don't really know what quality is that we don't have a really strong regulatory framework transparency model yet so that people can differentiate between, hey, this stablecoin, this company, they're audited, they're backed, they're government inspected or not. So people want to have a flight to quality, but we don't really know what quality is. And I think that's causing a great deal of uncertainty in the marketplace. Throw on top of that the natural volatility of crypto, and you're going to see really big swings, I think, over the next few months.
They do say that history repeats itself. Is there something analogous to this, perhaps something back in 2001 that you can pinpoint that could essentially mean that we're just seeing history repeating itself?
So I certainly feel that way. It feels very reminiscent to me, 2001, 2008. What tends to happen is that although asset prices go way up and down and there's a lot of volatility there, the technology adoption doesn't seem to have any change in impact. We see kind of technology adoption pacing along. And in particular, what we see are enterprises and others who are continuing to use crypto and blockchain technologies, but in ways that are independent of very volatile crypto asset prices. They're doing fiat currency denominated transactions. They're doing ESG data systems. They're doing, for tracking emissions. They're doing supply chain management. They're doing all kinds of things that generate business operational return without being attached to the cryptocurrency price or the underlying asset price.
And Paul, when you think about it a little bit more broadly, I mean, the idea that crypto was an inflation hedge, has this just essentially blown that out of the water?
I think it really has. Cryptocurrencies are a digital supply and demand infrastructure. And there's two things here. First of all, in a very speculative environment, they seem to go up and down with the rest of the market. Secondly, though, there's a myth inside crypto markets that somehow deflationary systems are better than inflationary ones. But that's really not true because it makes a whole kind of set of assumptions around the value proposition of inflation, whether or not there's other demands for the currency, and very importantly, what those demands are. And I'll give you a very specific and concrete example. In the Ethereum ecosystem, one of the demand drivers, one of the biggest ones, is as payment and use in computational transactions. I'm paying a transaction fee. Now, as Ethereum has become much more efficient, the amount of ether or gas or ETH that I need to use to process a transaction has gone way down. So it's very possible that you can have a scenario where the Ethereum ecosystem is wildly successful, tens of billions of transactions are done on that ecosystem, but the actual price of ETH, the core currency, doesn't really go anywhere because it's become so efficient. But I certainly think we're done with this idea that ETH or Bitcoin is some kind of automatic natural inflation hedge.
Paul, Dan here in Dubai, and in a way this is vindication for the bears, because when we see these wild swings, significant losses, in a way it undermines this narrative within the Bitcoin community that Bitcoin and cryptocurrencies have some kind of real world utility, whether it's a hedge against inflation or a means of exchange or a store of value or something else. But my question relates to what happens from here. What are the market signals that investors need to be looking out for to understand whether or not we have seen Bitcoin actually finding a floor? Because an investor would probably look at this situation and think, okay, value has been created here. And looking back over history, when we do see Bitcoin falling significantly, often it's met with new highs at some point in the future.
So I think there's two things worth looking for. Number one, you're absolutely right. Historically, sort of big plunges in demand have led over time to substantial recoveries. And there's an element of the Bitcoin story which is very compelling. Frankly speaking, in many ways, it's a better gold than gold. But I think the other thing that investors need to watch for here is a decoupling of the different crypto ecosystems. Bitcoin is a digital asset and it's positioned against gold in terms of its utility, which is to say you hold it as a hedge against inflation, but you don't do much with it. Ethereum is a programming infrastructure for business transactions. And while one of the things that's really interesting to observe is that while Bitcoin adoption has kind of moved along a little bit, the Bitcoin developer ecosystem isn't very robust at the moment. But on Ethereum, companies are building huge numbers of business applications. They're building lots of tools, technologies, and services. Ethereum is a kind of an internet of value and value creation. And I believe, we have incorrectly lumped Bitcoin and Ethereum together. They're very different kind of solutions and value propositions. Ethereum is a technology platform that's getting wide adoption. Bitcoin is a digital asset. Its place is potentially in your portfolio and comparable to gold. Those are really different stories, and we need to see a decoupling. They've been so tightly coupled together, right? Your chart is just right on there, but I think we all expect to see some kind of decoupling over time.
Indeed, it also says a lot about the maturity of the space as well, if that and when that decoupling eventually takes place. Paul, just finally, what happened over at Celsius? It seems as if on the way down, we often see crypto exchanges and these crypto businesses starting to blow up. On the way up, there's always a lot of activity, new businesses opening as well. But with regards to Celsius, do you have a theory on what's actually happened here and what could possibly happen in the future?
So very specifically, we never comment at EY on any specific company or client situation like this. But I come back to what I said at the beginning, right? The market is in a lot of turmoil. We're seeing a flight to quality. One of the things that I talk to people over and over again is they say, well, what is quality? How do I know which company is better than others? How do I believe one party more than the others? That is the really big problem here, is that people do want a flight to quality. There's arguments that erupt on Discord and Twitter, and they are fact-free zones. And in the absence of facts, in the absence of regulators, in the absence of auditors, it's rumor and opinion and kind of angry tweets that rule the marketplace, not sort of data-driven discussion of what is and is not risky. And that's the big issue here, is if we want to have a flight to quality, that's a good thing for markets. It needs to be grounded in some kind of fact base about what is the definition of quality, what's regulated, what's backed, what isn't, who's verifying things. We don't have enough of that yet. So I still see a really, really big payoff in the future for improved regulatory oversight. I think things are moving in the right direction, and I hope that we'll see more of that, because we'll avoid these kinds of rumor and driven discourse and market movements.